$250 billion for xAI. Elon is literally just moving money from his left pocket to his right pocket.
Oh, come on. You think a $250 billion acquisition is pocket change? The Sullivan and Cromwell lawyers billing on this strongly disagree.
Okay, the fee pool is massive, but overall deal counts are down 17% this quarter. Buyers are strictly whale hunting right now.
Whale hunting or just buying cake? Because KKR just dropped $2 billion on Nothing Bundt Cakes.
From rockets to frosting, show me the term sheets. The rundown. KKR is buying Nothing Bundt Cakes for $2 billion. $2 billion for cake.
$2 billion and a mountain of debt, Nate. They're taking it off Roark Capital's hands, and if you read the fine print, they're eating a massive amount of leverage along with that cream cheese frosting.
Classic private equity passed the parcel. Roark makes a clean exit. KKR gets a sugar rush.
It's literally flour and sugar. The multiple on this has to be completely absurd.
Moving from sugar to school buses, Bluebird just paid $200 million to buy out Girardin Group's stake in the Micro-Bird joint venture.
Now that is a deal I actually like. Full ownership, clean cap table, no more joint venture headaches, they just control the whole manufacturing line now.
Clean and simple, which is the exact opposite of the broader market right now. We hit $1.2 trillion in Q1 deal volume, which sounds incredible, until you look at the actual transaction counts.
Down 17%.
Right, buyers are exclusively hunting whales right now. Nobody wants the minnows.
I have to push back on that. Merit Medical just bought a minnow, $140 million for Viewpoint Medical to expand their oncology portfolio. Court Square just took a majority stake in Call Tower. The middle market isn't dead. It just gets ignored by the mega fund guys.
Oh, come on. A $140 million bolt-on is a rounding error when you look at the macro picture. Deloitte just put out a note calling 2026 a throttle-up moment for banking M&A because regulatory timelines are finally shrinking. The big banks are getting ready to eat each other.
Sure, if the regulators actually let them. Deloitte is projecting a lot of optimism based on a very small sample size of eased approvals. I need to see actual closed deals before I buy this narrative of an unlocked regulatory floodgate.
We'll see it soon enough. Keep an eye on the RYVWILE and RTB digital merger debuting on the NASDAQ tomorrow. That's going to be a real test of market appetite.
And speaking of market appetite and hunting whales, we need to talk about the $250 billion elephant in the room.
Elon's ultimate consolidation play, SpaceX swallowing xAI whole. The big one.
$1.2 trillion. That is the global M&A volume for the first quarter of 2026.
It sounds like a fake number, like a cartoon villain ransom.
Right? But the footnotes tell a completely different story. The overall transaction count is actually down 17%. Buyers are completely ignoring the minnows. They are strictly hunting whales.
And they caught a leviathan. We have to talk about the marquee deal. SpaceX acquiring xAI for $250 billion.
$250 billion. I read the Sullivan and Cromwell filings 3 times to make sure I did not misplace a zero.
As a former banker, I look at this and see pure strategic brilliance. You are putting the world's most advanced aerospace hardware together with a frontier AI lab. It is the ultimate vertical integration.
Nate, oh come on. Strategic brilliance? It is corporate incest. Elon is just moving money from his left pocket to his right pocket.
It is absolutely not just pocket shifting. You have completely different cap tables. You have different institutional investors who need an exit.
What exit? It is a paper transaction. Look at the structure. The market commentators are entirely right on this one. These AI mega deals are not traditional outright mergers. They are massive equity swaps masked as buyouts. SpaceX is just absorbing xAI to inflate its own private valuation. No real cash is changing hands.
Even if it is mostly equity, SpaceX needs that compute natively. If you are going to automate a Mars colony, you need an AI that operates in-house.
Fine. But the real winners are not going to Mars. The real winners are Sullivan and Cromwell.
Oh, the fees. The glorious, glorious advisory fees.
Can you imagine being the partner leading that deal? You are sitting in a conference room negotiating with Elon on the buy side, and then spinning your chair around to negotiate with Elon on the sell side.
Best gig of the decade. The buyer is playing hardball. Well, tell the seller to compromise. Sir, you are both of them.
They probably billed $10,000 an hour just to watch him argue with himself.
But jokes aside, a $250 billion price tag for xAI sets a terrifying benchmark. Every AI founder with a pitch deck is going to demand $50 billion tomorrow morning.
And they will get laughed out of the room. Deloitte is projecting a throttle-up moment for M&A this year because of shorter regulatory approval timelines, but that primarily applies to banking and capital markets, not tech.
You think tech M&A is tapped out?
I think a $1.2 trillion quarter driven by phantom equity swaps is a mirage. The real money is doing boring, traditional buyouts. Private equity past the parcel is still the actual heartbeat of the market.
Which brings us perfectly to the consumer sector. Because while Elon is buying artificial intelligence, KKR is buying frosting.
Yes, Roark Capital is finally offloading Nothing Bundt Cakes.
$2 billion for a bakery chain, and KKR is absorbing the brand's debt along the way.
From rockets to red velvet, talk me through this valuation. Voices. You look at that $1.2 trillion Q1 number and it sounds like an absolute frenzy. But whisper numbers are circulating and overall transaction counts are actually down 17%.
Right, so buyers are strictly hunting whales, not minnows.
Are they though? Because market observers are pointing out something I have been screaming about for months. A lot of these massive AI transactions are not outright mergers.
You are talking about the SpaceX and xAI deal.
Exactly. They are structuring these as incredibly heavy equity investments. It pads the global M&A stats to make everything look rosy, but it is not traditional M&A. It is just glorified venture capital on steroids.
Oh, come on. When you are writing a check for $250 billion, you are buying the house. You are not just renting a room. Functionally, it is an acquisition. The founders are not calling the shots anymore.
Functionally, sure. Structurally, no. If I look at the footnotes and the cap table, it matters. And frankly, those mega deals are masking a real softness in the rest of the market.
I will give you the softness point. But Deloitte just put out a note that completely changes the weather forecast. They are projecting 2026 to be a, quote, throttle up moment for banking and capital markets, M&A.
Throttle up. I love when consultants try to sound like Top Gun.
Hey, it is a good visual. They are citing eased regulatory uncertainty and way shorter approval timelines.
I will believe that when I see two mid-sized regional banks actually get a deal across the finish line in under 9 months. The regulators are not suddenly handing out hall passes just because it is 2026.
Maybe no hall passes, but the backlog is real. Shortened timelines are going to unleash a massive wave of financial services consolidation. We definitely need to watch the banking sector tomorrow.
Agreed.
But before we get bogged down in banking regulations, I want to talk about something way sweeter. Private equity past the parcel. Specifically, KKR developing a sudden $2 billion craving for Bundt Cakes. Spill the tea. I still can't get over $2 billion for cake.
KKR taking Nothing Bundt Cakes off Roark Capital's hands is peak private equity right now. It's just the ultimate game of pass the parcel.
But $2 billion? I know those little cream cheese frosting centers are good, but come on.
Read the fine print, Nate. They're absorbing a mountain of the brand's debt along the way. That $2 billion is doing a lot of heavy lifting for Roark's balance sheet.
Fair. It just feels so quaint compared to what we're seeing in tech. The whispers I'm hearing about Q1 volume are insane. We crossed $1.2 trillion globally.
Hold on. Don't let that top line number fool you. Total transaction counts are actually down 17%. Buyers are strictly hunting for whales. The minnows are starving out there.
I completely disagree that it's a bad thing. The market is doing exactly what it should. When you have SpaceX dropping $250 billion on xAI, of course the math gets skewed. It's top-tier consolidation.
Except half of these AI mega deals aren't even traditional outright mergers. They're structured as heavy equity investments. It's glorified venture capital dressing up as M&A to keep the bankers happy.
Okay, guilty as charged. We love a good fee event. But if you want real traditional consolidation, Deloitte is projecting 2026 is about to hit a massive throttle up moment for banking.
Oh, absolutely. Now that regulatory uncertainty has eased, approval timelines have shortened dramatically. There's a massive backlog of financial services deals just waiting to clear the desk.
Which means we need to keep a very close eye on the banking sector heading into tomorrow.
We also need to watch the market reaction to the RYV Whale and RTB Digital merger. They're prepping for their NASDAQ debut, and I really want to see if the public markets actually buy the hype. Tomorrow's radar.
Deloitte is calling tomorrow a throttle up moment for banking M&A. They think these new shortened regulatory timelines are going to open the floodgates.
I read that note and I am not buying it. Look at the broader market. Deal volume is massive, sure, but actual transaction counts are down 17%.
Because buyers are strictly hunting whales.
Exactly. Nobody is buying regional banks. They are too busy chasing the next xAI mega deal.
Fair, but keep your eyes on the NASDAQ tomorrow morning anyway. Rival and RTB Digital are making their combined debut.
I am setting an alert. I am also watching for KKR's filing on the Nothing Bundt Cakes buyout. $2 billion for a pastry franchise.
Roark Capital is laughing all the way to the bank on that private equity past the parcel.
$2 billion. Do you know how much frosting that is?
Enough to sweeten the debt they just absorbed. We will read the footnotes when the filings drop tomorrow.